Hello, this is Greg Womack, Certified Financial Planner and President of Womack Investment Advisors. Thanks for tuning in today. Today we're going to talk about tax planning. Now, some of you have responded to our offer, and so this will be kind of a follow-up to that. And so what I want to talk about tonight is tax planning, particularly year-end tax planning. You know, now is the time to plan for year-end reduction tax strategies. A lot of people think they can wait till maybe April 15th before and do some things. The big tax savings have to happen before the end of the year. So I want to talk about some of those today and what we're going to need from you to help you develop a strategy. First of all, we're going to use some underutilized strategies to offset up as much as half of your income from being taxed. And you say, well, Greg, how in the world do we do this? Well, a lot of those are through some supercharged charitable tax deductions. Up to 50% of your adjusted gross income can be written off or itemized to reduce up to 50% through charitable deductions. So I'll give you an example here in a minute. The charitable deductions that we're talking about can be carried forward up to 15 years. Now, if you're a farmer or a rancher, possibly can claim up to 100% of your adjusted gross income can be claimed and deducted. So there's some substantial tax savings that we're talking about. As I mentioned, up to 50% of your AGI in most cases. 31 states give deductions and some states actually offer credits. Now, let me give you an example. $1 million adjusted gross income, as you see on the screen here. If you're in the 39.6% marginal rate, plus you add state on top of that, and I'm going to add in this example California because California is one of the highest taxed state tax rates. That would put a person in the 52.6 rate. Anything over $500,000 basically will be taxed at 52.6. Can you imagine that? So, what we can do is say 50% of your adjusted gross income is $500,000. Well, if you've already given, say, $100,000 to your church, that would leave another $400,000 in allowable deductions in 2017 that you could take. So, an investment of $100,000 would yield you roughly $440,000 in deductions, and that would save you in a 52.6% tax bracket $231,440. That's huge. So $100,000 would over double to $231,000 in savings. So this is the type of thing that we're talking about. These are some huge benefits, and we want to make sure that see if you're eligible for those. Many of our clients are. So what do we need to get started in your tax reduction strategy? We're going to need a few things. We're going to need your 2016 tax return. You can send those in a share file, secure file, or you can fax them over if you're concerned about on the internet. So we'll sit down or come in person. We'll sit down with you, review your tax return, see what options we have for this year. We also need to know how much you're projecting your adjusted gross income to be for 2017. That will drive a lot of the direction of how much you can do. And with that, we form a year-end tax strategy. We'll run it by your accountant or your CPA, make sure they're on board, make sure we're not missing anything. So that's what we'll need, and we want to help you find some huge tax savings for this year. And so we want to get started. Let's get started today. So time is running. Please click on the link or call us on our phone number here. 340-1717, area code 405. We also have a toll-free number for those outside of the area. It's 877-340-1717. Thanks for tuning in. Appreciate it.